Blake Bartlett, top of the morning. Thank you very much for joining me on the Product Tea with Leah, the podcast where we talk about business, PLG, and anything else that is not fun in life. So, can you introduce yourself to the audience in case someone doesn't know you for some reason?
Well, first off, thanks so much for having me on the show. Great to be here. But yeah, I am Blake Bartlett. I'm a partner at Openview. We're a venture capital firm that invests in SaaS businesses, and we're all in on product-led growth. So that is me.
It's really great to have you, and I'm gonna introduce you now back to the audience because your relevance to my life is actually quite big. Well, at least indirectly. So it's all your fault that I landed in product led growth in the end. I mean, kind of, at least on the terminology side, because I think you were one of the driving forces that started to coin the term, if not the driving force. I believe your article that actually coined the term was the first one that really called it product led growth. And then since then, everybody's been picking it up and has been running with it. And I know you through LinkedIn. I think we've interacted a couple of times. We both think that we're incredibly funny. The judge be the audience in the end. But I also think that you have a very specific talent when you're trying to communicate the basics around product led growth, because that is sometimes much, much harder than any of the advanced messages where we talk about, like, hey, how does a very specific SaaS business work or whatever. It's simplifying all of this crap into a message that can be understood by the market. I feel like is one of the table stakes that you need to have, and it is not easy. It is absolutely not easy, and I really appreciate this. I think you're more on the TikTok side of the audience in the end. I don't know whether that's true, but I think you're doing an absolutely fantastic job, and I would also like to hear about this a little bit more, whether that's actually true. I live mostly on LinkedIn. I feel too old for the other stuff. But from what I see from you on the YouTube videos and or like the interviews that you do with all these people and the stuff that you do on product led growth, it's absolutely amazing, and I'm very very grateful because you've also been part of my career in the sense. So I'm I'm very happy to talk to you today about it.
Well, thanks for all of that. I just product-led growth is like I'm kind of a one-trick pony. So like anybody that wants to talk PLG, I'm always game. So I'm glad that we're taking it from the virtual conversation across LinkedIn to here we are talking live. So thanks for making it happen.
Yeah, that's fair enough, but it's a pretty big pony, to be honest. Like, yeah, you can call it a one trick pony, but now this pony, and we can talk about this, I'm pretty sure, is starting to be split up into multiple sub ponies. And I think you and me, we both have the opinion that there's no other ponies to choose from anymore. So you need to start to specialize in it. And yeah, but before we get into this, I have one question that I always ask my guests because I feel like it's a very interesting one, and I cannot wait to see what you have to say about it. And the question is, what do people usually get wrong about Blake once they start to get to know you?
Well, I think there's one thing that this has been a journey for me as a VC, is that there's oftentimes this perception of you're either a VC or you're an operator. Um, and sort of where this came from was that there was this growing trend, probably when I first got into venture about 10, 15 years ago, where former operators, former founders were then becoming venture capitalists. And then, there was this starting to be this perception of are those going to be the only venture capitalists that get deals done? It's like founders will choose people who have historically been founders. And so then it kind of created this this identity crisis for VCs like me who were career VCs, which is, shit, do I need to stop being a VC, go be an operator for a while so that I can come back to be a VC and like be a real one? And so this kind of dichotomy of like being a VC or an operator, I think I've come to find that it's a false dichotomy. There are lots of differences, but at the end of the day, if you're growing if you started a venture capital firm, or if you're sort of grown in your career to then be a partner at a venture capital firm, guess what? Venture capital firms are companies too. And so if you think about us at Openview, we have 80 employees. We raise a fund every 3 years. So we have investors. We set goals every year. We have to approve a budget. Like all the stuff that happens in an operating company also happens at a venture capital firm. And so there are so many things of, from being an operator of a venture capital firm that then correspond to being an operator or being a good board member and giving advice to companies as well. Obviously, it's very different. We're not building a product. We're sort of, a services based business, but there's so many things, whether it's like leadership, team dynamics, compensation, goal setting, budgeting, strategy, company values, like all that stuff is still very, very similar. And so, yeah, I've grown to realize that there is not a dichotomy between being a VC and an operator. There are just differences.
I absolutely love this take for a very specific reason. I think this is also my experience because I'm usually coming from the other side. I have to present to VCs or to investors. And I feel like one of the big differences is that how we analyze businesses and how we interact with them has completely shifted. Sure, it's still about revenue, it's still about traction, it's still about how much money can we make in the end. Sure, I get it. But this entire conversation has shifted in a way that VCs have become much more available, right? You have multiple VCs in maybe the same round, and these VCs maybe are even from the same specialty, like machine learning startups, whatever, right? So it's not anymore like, hey, I have 3 interested VCs that might invest in my business. I suddenly have 3 VCs that are all specialized in machine learning and they know my business really well. And that has become a necessity because if a VC knows your business, they also know where to look for traction and how to evaluate your traction much better. And that's such an interesting shift because it's also what happens across the board in all companies. It's like we have to become much more knowledgeable about what other people do. As a product leader, you need to know what sales is doing. You need to start to know what marketing is doing, especially in product-led growth. You also need to know how investors are actually working, but investors at the same time need to also know how it goes at the bottom of the snake pit, if you want to call it that. You cannot just look anymore at revenue numbers and understand whether a business is a good investment or not. It's just way more complicated than this. And but that's also fun, and that's also why we can niche down. Just like you, I think I started to niche down, and I think Openview is specifically positioning themselves as a SaaS VC investment firm, and that was unheard of, like that you can actually be very specific. You can even say like, okay, we predominantly invest into PLG SaaS, or in a very specific size. And I think that's one of the things that just has happened in the industry. And that's also how I position myself. And it's only possible because we're getting commoditized. It's not just about you want someone in a very specific function. You want someone in a specific function in a specific domain that also knows the company stage that you're in. And that's pretty amazing, right? Would you say that this is a pretty accurate statement?
Yeah. I think one thing that we have sort of philosophically at Openview, and it informs our strategy, is that we say that VCs oftentimes don't practice what they preach, which is they get into a boardroom, they're talking to a young startup, and they say, you have to focus, 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 focus. You can't be all things to all people. Then they leave the board meeting and sort of go out and don't focus and end up trying to be all things to all people. And so a lot of times you'll have a venture capitalist who they're on a board where it's, a consumer company that's still trying to build a product and get product market fit. And then a late stage SaaS company that's about to go public, and then a biotech company and a crypto company. And yes, they're all startups. And so there are similarities around building a startup and getting it off the ground, but the similarities stop there. And so our philosophy has been, if there is no context switching for anybody at Openview, if everybody is always doing the same exact thing, all investors, all of the platform people, all we do is SaaS businesses or B2B software, so infrastructure and SaaS, at one stage of their development, post product market fit. There's going to be a lot more value that we can add, and a lot more specificity and a lot more relevance that we can add there, versus like constantly context switching to all different kinds of companies at all different stages, all across the globe. And so we believe that focus, is what allows any organization to truly be excellent. And if you don't focus, you're just going to be mediocre. So we try to practice what we preach, and that's why we have such a focused strategy, and we're so particular about that.
Yeah, I really love this. And I think there's one specific market movement that is also underlining what you just said is going to be the future and not just like a blip. Um, even if we have a market downturn, and even if companies will go bust, and there will some companies that will go bust in the next 6 to 12 months because they will run out of runway, they will cash out. That's just, there's no question. They just will not raise anything. Even if that is happening, and it will happen, um, the recent advancements in AI, machine learning, and everything, if you compare it to how difficult it was to found a company and get some product out into the market 10 years ago, has led to a very interesting dynamic. So everybody thinks it's easier than ever to, to make money. That's what people think, because it's easy to produce a product and to, you just get started. Hey, you just need to get to chat to OpenAI, and then you can have a landing page. You can go to Midjourney and you have suddenly a landing page. What that does is you're creating a commoditized market with so many competitors around you that it's going to get harder than ever to differentiate yourself. So you need to understand much more about this market than you did before, because before the question was just like, is Blake willing to go door to door to sell his stuff? Whereas today you have 100 people that are coming door to door with you, and you need to make sure that you are special. And I guess this is also how the VC business actually changed. It's, you will never run out of SaaS businesses in a scaling stage that you can kind of invest in, right? And there's also funds that are focusing more on the seed and the product market fit stage. Um, but yeah, what that means is that you need to be really fucking special nowadays to get some funding, because there's a lot more competition around. And I feel like that's what's so fascinating about this entire business that we are in right now, and it's only going to
Yeah,
get worse. It's only going
exactly.
to get worse.
As you're describing that, I thought of a really interesting parallel, which is it's totally different, not at all sort of related to building a business, but think about being a musician and trying to get recorded and trying to get your stuff out there into the world. 20, 30 years ago, that was really, really challenging. How do I get a record deal? Because the only way I can get into a really nice, expensive studio is if I get a record deal, so that then somebody will fund me, with $100,000 studio that I can't afford myself. You fast forward to today, it's like everybody has, an amazing MacBook Pro. They have sort of professional level, studio software on that MacBook Pro. You can easily buy recording equipment and and you don't even have to have a band. You can be a solo project and record a whole album, in a cabin in the woods, and it sounds like, what used to cost $100,000 or more. So there's this democratization through, prices falling and technology improving, and so now anybody can record themselves. And then the internet, hey, that's pretty great. With streaming, like anybody can get their stuff, out into the world. But what does that mean? If the barrier to entry is lower, it's like everybody on earth is now a musician, and it's harder than ever to break out because there's so much noise, or so many alternative, literally noise, or things that you could listen to. And so it's easier to create, but it's harder to break out and to get people to pay attention. And that parallel, very much applies to startups. And I think that's what you were saying. It's easier than ever to build a product. You don't have to go buy servers and like build a data center and do all this stuff that you had to do in the old days. You can set up something that's self-serve, and you can kind of, get people to use it without having to hire salespeople and all this stuff. But guess what? Everybody else can do that as well. And so, there's so many more substitutes. There's so much more competition. So it's harder to get attention. It's harder to break out. And, then VCs looking to invest in something, they're looking for more signal. It's not just, hey, you built a cool product. It's great. Is it working? Because there's 10 other companies, 20 other companies that also built a
Oh,
very similar cool product. So what's different, and why are you going to win?
I love this example because it's going to get much worse. Okay, so let's spin this one step further. 20 years ago, the difficult thing about music was making music. And then, like, I mean, maybe you had some gigs, or I don't know, you were known around whatever, and then the music industry came around and made the distribution part of it easier, right? So, but like, like you got signed to a record company, you had to give away like 40-50% of your, maybe even more, I don't know what it was. And then the distribution game got even easier because you had suddenly Napster and Spotify came onto the scene and everything. But so, like, we made everything easier for you to kind of distribute your music. Fast forward to now, we're now in an area or in an era where machines will make the music for you in some ways. There's some scary machine learning stuff out there that will make it much, much easier for you to create some music, but that also makes it easier for everyone else. And as you said, the game is completely different, where distribution is easy and the creation of a product, You have to differentiate yourself with something very, very, very specific, and that is the quality of what you produce in some tangible way. And then you also need to be measuring it, and you need to be able to make it visible to venture capital firms or like any investor that believes in your business, because it's just not good enough anymore to have the next hit album because you're going to stay 16 weeks on top. That's just not what's happening. um, it's never been easier to distribute and to rise up and fall very fast again. I'm not sure whether you've seen the numbers from Be Real, for instance, like, which was also quite an interesting bit. um,
I have not seen the numbers, but I've gotten the perception that it went up and
yeah,
it's coming back down.
absolutely horrid, absolutely horrid. They're just gone, you know. Like, it's kind of like if you have an anti-use case, like, okay, let's just make we are the Instagram for real people, right? Like, that was their kind of entire positioning. It went up like crazy, and if you were going in as an investor on the upside of the hockey stick, good for you, but not anymore, because this entire thing is just came crashing down. And that's a risk in the business that you did not have back in the days, because the markets were not adapting this fast. Everything is so crazy global that every market is big enough, right? The TAM is always big enough. This is never the problem. I don't know whether you also see it this way, right? But like, I don't. If somebody brings up, if one of my product managers brings some business case with like, yeah, the TAM is not big enough or whatever, bullshit. Everything has a big enough TAM. That's not the problem anymore. The problem is market penetration. And that's the only thing that matters most of the time.
Yeah.
So yeah, I love the example of the music.
Yeah. Yeah, there's also I completely agree with all of that. There's also, this brings in the dichotomy of and the differences between investing in consumer versus investing in B2B. And this is actually the reason that I ultimately went to B2B, is that it's so hard in consumer to tell what is novelty factor and what is sort of a flash in the pan versus, and what's something that went viral for, a month or for a quarter or even for a year, but doesn't have staying power. And I always say that, like, if you had given me the pitch for Twitter before Twitter existed, I'd be like, that's the worst idea ever. You can only write 140 characters, and like somehow this is going to change the world. Like, no, I'm going to pass. But then, hey, guess what? It became the next big thing. And like, but then Be Real, like, how do you know if it's going to be the next big thing or not? And ultimately, consumers are fickle. Now, there's the other
Yeah.
side of consumer, which is if you build something really, really great, like there's more consumers, than anything else. There's 6, 7 billion of them in the world. You can build a massive, platform that really does like end up having a large percentage of the world's population on it. So like the upside is huge, but getting there is next to impossible, at least for me to predict. And so I ran to the world of like, people are still irrational everywhere, but like at least in business, it's like, all right, I'm going to allocate some budget to this thing. Does it give me ROI? If so, then I will keep subscribing to it. And there's a lot less of that novelty factor or fickleness or sort of flash in the pan stuff on B2B. So yeah, there's lots of angles to look at this from, but I think the B2B versus B2C angle is also pretty relevant here.
Yeah, that's very true, because you can actually burn much quicker in a B2C product that you can with a B2B one. Um, I think if I'm just looking at the lifetime values of your accounts, just how they actually change in terms of, if you do not have a very exceptional product and like you're swimming in the average pool. This it's always funny because most company founders think that they're very exceptional, whereas they're like, your company is doing exactly what the rest is doing as well, and that's fine. Like, you can be profitable and be completely average. But the thing is, if you have an LTV per customer of like $50 to $60, or like they stay with you on average for 6 months, that means they're also very quickly gone if there's something changing in the market, right? So like COVID hit, and if you had a business that was dependent on COVID not being around, whatever that means, you suddenly have no one around anymore. And all the other sales-led businesses, or like B2B, or like more like B2B clients, they were kind of crisis safer for at least 1 or 2 years, because it takes longer for these accounts to run out, like, and to renew. And for a business, it's also harder to just quit a product. So this easiness in of adoption of like, yeah, I'm going to go with a trial and I sign up for a product, is a curse and a blessing at the same time in the B2C markets. And exactly the same reason why I also do not consult in B2C markets too much, too much. Usually my B2C clients, they want to move up market for a very good reason,
Yeah.
right? So like, they want to expand to team use cases. They just want to make more money per customer, not because they're money greedy, just because they know, like, if I onboard the entire team of a company, it's much more likely that they're going to stay, even if the market changes quickly. It's just not that easy to migrate anymore because the data of people is becoming valuable, and you want to expand your product in some way in this regard. And that's also something that VCs want to see nowadays, right? So like, how how can you hold like the stickiness, right? So like the retention that we always talk about, like how can you make this visible is a difficult question, but if you solve it, that's where your valuation is going, right?
Yep. Well, ironically, the biggest B2C businesses in the world actually have B2B business models. Like Meta, Facebook, consumers don't pay for that. Who pays for it? It's a B2B product on the back end in the form of advertising that drives the entire business. And so even the biggest B2C businesses in the world, the same could obviously be said for Google and others, are not, at least we're talking about digital. Obviously, e-commerce is different, but in digital, it tends not to be built off of consumer subscription. There are some kind of exceptions like Netflix and others. But even with Netflix, now that every other media company in the world has a streaming service, it's now starting to be harder for Netflix because they're no longer the monopoly. But very few large B2C businesses actually have a B2C business model. And it's because of exactly what you said. It's like the lifetime value, the churn, the leaky bucket issue. It just only gets worse the larger that you get. And you actually do start to run out of TAM of people that are willing to pay you at any one given time. And
Yeah.
so, you just have this like, churn cycle that you're on that's hard to get out of. So yeah, whether it's like finding other business models or going, like you said, up market to sort of drive higher ACVs and build a business product on top of a B2C, motion, is huge.
Yeah, that's very true. I guess when I said the TAM comment, I didn't mean like the exceptional companies that made it, like Uber, Twitter, and so forth. But yeah, point taken. I think it's a fair point. So
Yeah.
yeah. So I'm not sure whether this is a good question in this regard, but like you're probably also coming across a lot of um, misconceptions when we talk about product-led growth in either on the VC side or in the market in that we are operating and also produce content for. Um, I guess one of the things that I constantly notice is that there is the terminology. You did not do us a favor, Blake, by calling it product like growth. So the problem is there's two misconceptions in general that I see in the market. One of them is that people just do not understand what it is beyond trials. While that is not wrong, it kind of misses the point on what the principle behind it is. And the other thing is that this is not a product problem. This is not like a silo product, like in a company that is driving product like growth. This is a company problem. It's not a product thing. Um, do you mirror the sentiment? Do you also see it in this way happening? And how do you usually address this? Do you talk with also companies that you're being engaged with? Do you kind of clarify the terminology before you go into anything?
Yeah, definitely. There are a lot of those misconceptions where people, I think, are looking for a shortcut to PLG. They're hearing, okay, everybody's talking about PLG. My competitors are PLG. Let's get some PLG into our business as well. And they'll sort of think that means, well, if we hire a growth team, okay, now we've become PLG. If we hire a head of PLG, great, now we're PLG. Yeah, we have some of that too. Or if we have a free trial or if we have freemium pricing, great, now we're PLG. I even see this for people saying they turned on a referral program, so great, now we have PLG as well. And like all of those things are tiny little tactics, and yes, lots of those things you find in a PLG environment, but sort of adopting one single tactic does not all of a sudden make you PLG. So there's lots of those misconceptions, and I completely agree with you. Is that so? Then what is PLG? Is it a marketing thing? Is it a go to market thing? Is it a product thing? It's like no, it's a company strategy. It's a different way to build a software company. And so it's like
No.
always getting that sort of starting definition correct. And then obviously there's lots of questions that come from there, but you have to sort of have that right starting foundational point, which is this is a company strategy. It's a different way to build a software business. It's not a tactic. It's not a team. It's not sort of a feature in your product. It's everything.
So let's say you have an interesting prospect, and let's say they came out of product market fit and they're in the scaling stage, and you're trying to also analyze the business, whether it's a good, like, or Openview in general, whatever, whether it's an interesting investment opportunity. And one of my kind of mantras, and you can challenge me now live whether this is correct or not, or whether everybody's going to drop me, was always that depending on the company stage that you're in, you're looking for different things in the sense that while you were doing product market fit, the VCs also cared a lot about your hacks in terms of how did you get to this initial number, like the wow factor, the reactions from people, that kind of stuff. This is very valuable traction signals, right? That you have product market fit. And that's what these VCs are specializing in. But now what got you here is not going to get you there anymore. I would say that Blake probably also does not care whether you manage to get 10,000 people with a one time hack that you did in a specific conference in Austin somewhere. While that is impressive and interesting, what we're looking for is really repeatable stuff. Like, how do you incentivize your team? Do you understand what customer success means? What is your market doing in the next 5 years? And why do you think this is happening? Is becoming the traction indicator opposed to before more like the hacks. So what I would say, like to summarize again, what I'm saying is that on product market fit, it's more about the hacks, and more on the scaling stage, it's about how do you make sure that you can repeat what you're coming up with. Like, how does your experimentation look like? How does your data setup look like, and so forth? Is this correct in the way that you also establish connections with companies and evaluate them?
Yeah. I think when I was hearing you describe that, it kind of brings in that you have different tactics or you have different approaches at different stages. And the thing I was thinking of is this famous kind of tagline from Paul Graham at Y Combinator, which is do things that don't scale, which is the right answer in the beginning. But then once something works, then you very quickly need to figure out how to make it scale or how to find something new that scales. And so bringing that into the context of what you're talking about right now, and like real life conversations I have with founders, a lot of times they'll say, well, we have 10,000 users. Great. How did you get those? Well, we had a really successful product hunt launch. Okay, well, you can only have one of those. Or
Yeah.
like you can have subsequent ones, but like, you can only ever have one first time product launch that, gets all of the attention and gets the virality and stuff. So like what comes next? How do you replicate that? And so figuring out, was this like you said, a hack, or is this something that's sustainable? And another way to think about it is those hacks are important because those are the things that kickstart your momentum. But then how do you keep, if, to use another business analogy, the flywheel, you need to get it spinning. It's really hard to get it spinning. And so you need some like catalyst, some kickstart to get it spinning, but then what's going to keep it spinning from there? And a lot of times I think people can confuse those two things, like look at our kickstart. So of course the flywheel is going to keep spinning. And it's like, no, you have to do something else. And I think a lot of times that's not appreciated.
Yeah, that's very true. And I think now I'm thinking I may actually adjust my pitch a little bit in this regard. So what I would say is that if I give Blake $1 million to figure out product market fit, or like you get me the first initial 10,000 that I needed to actually kind of figure out product market fit, that's kind of fine. But once we go into the scaling stage, I need to kind of explain why to the VCs this was the right move, and whether I can duplicate this with Blake number two and another person. Can I do it with Leah as well? Because if you can actually approach it with social media influence, and you can put this kind of money onto the bed, and then you can reach a new segment, then it's kind of becoming a repeatable thing. And it's less about what you do, but like more like what was the process that led you to this. If is it only the CEO that has these amazing ideas? What happens if he's gone? Or like what all of this kind of stuff is business risk. And yeah, I guess
Yeah,
that's the message behind it. But yeah, I agree with everything that you said. Yeah.
totally. Another real life example. Um, a way that people can, one of those hacks or one of those kickstarts right now can be that you go viral. That you go viral through an influencer who found your product on, YouTube or TikTok or LinkedIn or whatever it is. So that's great, but you can't replicate virality. You can't replicate that serendipity. So, what would a great answer or what would a great sort of situation look like here if I was talking to a founder? It would be, hey, so what kickstarted our motion was we had this influencer, these couple of influencers that found our product, and then they went viral on TikTok. They got millions of views. We understand that that's a one-time thing, but we see the value in influencer marketing. So then we hired a head of influencer marketing, or we have one marketing person and all they do is
Yeah.
influencers. And here's the program that we've created. And so we have this always on system, and then occasionally we'll go viral again. And that's always a nice little benefit. But at the end of the day, like we're building this, kind of practice in this program around scalable, influencer marketing. So that would be how you sort of take a kickstart and then turn it into something that a VC says, okay, yes, I can expect to see some more goodness coming out of this, as one sort of zoomed in example.
I absolutely love this. There's this other thing that I even say on the sales side. Even if you do PLG with the sales, not sales led business, but like if you just use sales to generate initial demand, I think early on it's really about whether the founder can sell. Can you show in the market that people want this? And then in the scaling stage, when people like you get on board, is it about can you teach others to sell the way that you did to an equally sized kind of market that is big enough? And it's the same principle, right? So, like, I guess in the first stage, it's about what is the idea in my head, and then on the scaling stages, how do I put this in other people's heads so they can execute on it? So, like, where's the answer in my organization? And I think that sounds pretty cool, to be honest. I'm going to use this from now on. Just saying. It's like, that sounds pretty cool.
Yeah.
So yeah, let's just go with that.
Let's do
um
it.
yeah, let's just do it. Exactly. That's a TikTok right there. Boom.
Boom.
That's just what it is. So let me ask you a question in this regard, because I said also in the introduction that you have a talent to simplify the message without diluting it. And I think this is also why this term was so important. It's kind of like, what does product led growth describe, right? It's like customer centricity in a B2B environment and so many more things. But at the same time, the simplified messages, I think you're much more on the ground and also doing a better social media game in terms of I don't know whether you're really on TikTok, but I think you are. Like, you also have your media presence over there and on YouTube. You're much stronger on the visual side. How do you balance this kind of as an ROI towards what's happening on Openview? Because someone could say that, well, it's not that important that we're happening on TikTok because we're focusing on scaling businesses. Like, how does this come together? And how do you see the value of the simplified messaging with the complex investing side of the business? How do you bring this together? What is the idea there?
Yeah. I think this actually, I'm going to go back to your first question, which is what are some misconceptions? I think there's a lot of misconceptions about venture capital. So a lot of times people will have the reaction of, oh, you work in venture capital, you're a VC, like that must be a really easy job, because they have this perception of a venture capitalist, which is like Shark Tank, which is like the VCs sit there and like the wanting entrepreneurs come in and say, please give me money. Will you please give me money? Anybody give me an offer, please. And maybe that's the way venture capital was like in the 80s and 90s, because there just wasn't that many VCs. But today, the asset class has grown tremendously, and there are more venture firms than you can count. There's new ones being created every day. All of them have raised more capital and just continue to raise capital, even in today's environment. People talk about how much dry powder is out there. The venture capital market, from people you can get funding from, has never been more competitive.
Yeah.
So then back to the misconception, it's not that easy to be a VC. It's really easy to invest in companies. It is super, super hard, next to impossible, to invest consistently in really, really great companies for lots of reasons. Like, it's really easy to get them wrong. But then even another really big challenge is the fact that, again, supply and demand, there's a lot more supply of capital out there. And so being able to get access and be the one that wins the Series A in that next promising company, or that wins the Series B, or even has a shot on goal to be able to potentially win that round is a starting challenge. It's a starting problem. So then how can you make yourself stand out? There's lots of things you can do to make yourself stand out. But, in 2023, a great way to do that is a personal brand. That could be because you're like have a huge following on Twitter and have like lots of hot takes, and like everybody sort of loves to follow you. It could be you have a great YouTube show. It could be you have a TikTok following. It could be you have a huge Substack. Whatever it is, it doesn't really matter, but something that allows people to understand that you have a point of view. What is your point of view? Is it a point of view I find interesting and I want to hear more of and hear it applied to my company? People are doing their research before they're even, having a sales call, if you will, with a VC. And so you need to be in that research phase. And so it's kind of bringing some of those things together. The competition of the venture capital landscape along with how do people make decisions about who they're going to engage with as a vendor, so to speak. And it's through research on social usually, and that sort of brings in this opportunity for personal branding. So that's kind of how I think about it, is that it helps with deal flow, and it helps to position me that I'm not just another VC, but I am this
Yeah.
specific VC with this specific point of view, and this is why you should want to talk to me. But I think
I
that's
love it.
similar to how anybody thinks about personal branding. That's kind of the core reason to do it.
I know, but it's exactly on the point of what we said in total. And I think it's also great that you mentioned that this is kind of like a vendor thing, because it's almost like a two-sided marketplace, right? So the dynamics are similarly like with Uber and the passengers that it picks up, right? So like you have the VCs that can transport the people, and at some point you have an imbalance, right? So right now we're in a market where capital starts to become expensive, and your job becomes arguably harder because of the market situation, but at the same time it becomes also easier, right? Because there's less capital around. So if you're still here and you still have some capital, it's kind of like a, yeah. But I really love this analogy, and I think it makes a lot of sense to look at it in this way. And what you said about the personal brand is another, I think, confirmation to the hypothesis at the start, where we just basically said, look, it's about trust. It's not about anymore getting someone in that owns part of your company. It's about really getting a partner in as well. Um, I also know from our side at Jua, what we do is with machine learning, it's very hard for any VC or investor to spark our interest if they're not coming from this particular industry and they don't understand either machine learning very well, the potential of it, or whether we're just not interested, right? And because now we're riding on this wave, if you want to call it that way. But for other companies that are in areas that are not right now on the upside, right? So like they're actually really suffering from this entire downturn, they have a different game to play now. Maybe they have to take any investor that is now offering money, because otherwise it's just lights out. And that means you might have people on your cap table that you do not want to have in your cap table. So it's kind of like it drives down valuation and it increases risk at the same time, which further drives down valuation and so forth. That's why this entire thing is a bit more complicated than just interest rates. Um, and I think it's a fascinating market to be in at the moment, but you do not want to be in a startup right now that raised just before the actual market went down, because it's going to be brutal. It's going to be brutal. And this is why we also see all of these layoffs, because nobody's really believing that this is going to stay. This is just going to go back to the craziness that we had from before. But yeah.
Yeah. Well, it's a hangover, right? Getting the
Oh yeah, a
hangover
long
is
one.
really fun,
Yeah.
but then once you have the hangover, it was really not fun, and you can't get out of it. You just have to like work through it. So that is kind of what happened to the overall just like startup venture market, is like people partied really really hard, way harder than they should have in 2020 and 2021, and like now the hangover's hitting and we're dealing with it. Yeah.
Yeah. And I think that this was a bit a sign of the times, because as everything goes up, the risk aversion is going down, and we just push our revenue harder and harder and harder. And I think that's one of the downsides that we need to learn how to deal with in product-led growth as well. If you put two businesses next to each other, and one of them is product-led growth and the other one is sales-led, and they sell kind of the same thing to the same market, product-led growth will win out in terms of the CAC, right? So like the cost per acquisition, of course, right? So like it's much, much cheaper. The problem is, if you have a CEO at the top or a board that is that is just always having in their head, well, we make 500,000 per employee, let's just push more into growth, you will still end up with the same problem. If you are just producing enough revenue per employee that you can just get by because you feel like, no, 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 more, 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 and more, no business model in this world is going to save you anyways. And this is what happened. Not all companies that had to do layoffs landed in this situation because they were greedy, don't get me wrong. But I think it's kind of a culture that we had where, like, who's watching us if things are going too well. This is the same stuff that happened in Wall Street, right? Like, we're just not, the risk profiles were unacceptable, and because there was so much money around, and because there's so many VCs started to pull the trigger on deals that they shouldn't have. Companies got valuations that they shouldn't have. And at some point, it's just going to blow up because crazy valuations drive crazy other valuations. I mean, this is the kind of thing that's very, very interesting. So, to me, the big thing where I just made really big eyes because I also worked in this entire area in this industry was the acquisition announcement from Adobe that they bought Figma. And that was right in the downturn. And I don't know how long that these deals are taking, right? But like this was a 50x evaluation, not just purely on the investment potential, of course, because that was a competitor that was getting too dangerous for them. But I think it's going to take a long time until we see something comparable like this, like long, long, long time. Um, I don't see us recover from this entire thing so fast because Adobe was also punished for this kind of decision, right? So like their stock it just went down. But they kind of felt like, okay, this is a strategic decision that we have to make. Stakeholders were not happy, or shareholders. And yeah, so it's fun times to be around in this market, I guess.
Yeah, it is. It is. Well, it's interesting. I don't know how fun it's going to be, but it's going to be. We're all going to learn a lot. That's for sure. By going through it.
Yeah. So maybe more on the personal side, if you don't mind the question. I mean, you're also someone that has a lot of hats on, right? So like social media, this, Openview there, you have to kind of span the entire messaging stuff. Sometimes you have to talk to people like me on podcasts and so forth. And we interact with a lot of competent people and people that we admire. People, I hope you do. I mean, I hope you also reach out to people that you actually like working with. But like for me, the experience was always that the more you move forward in your career and whatever that means, like whether you get more followers or whether you talk to more important people or whatever, there's always like some kind of insecurity around the next corner. And what was extremely valuable for me is that at some point, kind of the realization started to set in that everybody's winging it, right? It's like we're all a little bit shit during the day. But it's also quite important to actually talk about this and that this authenticity that you also mentioned is becoming extremely important. Um, are you also dealing with something like this? Because for me personally, it got better, but it still is a problem. Like if I feel like I don't know something and I'm pushing something out on LinkedIn where I feel like, this is just not good enough. That there's some little voice in my head that tells me, oh, maybe I'm going to get judged by this person or that person that means a lot to me, right? Like I don't want to disappoint them, like, and I should know about it and all this kind of garbage that you have in your head. Are you also dealing with this from time to time?
Yeah, definitely. I mean, I think from the creator standpoint and in doing content, I it doesn't, at least for me, it just never goes away of the fear of rejection. And like, you're happy when a post goes really well and you're sad when it doesn't go well. And then it's also can be like really hard when you have one that goes really well and you're like, great, I've like hit this new seam, like I'm gonna like have all this engagement, and then you post the next one and it gets like 20 likes. You're like, shit. So like that whole thing of like, and then that leads to the existential question, like, why am I doing this? Is this even working? Like, all that stuff is just like constantly for creators of all shapes and sizes. So there's that. There's always the sort of fear of putting yourself out there, getting rejected. I would say probably like the biggest sort of area of insecurity that I've had to work through as a VC. Quite frankly, it's being a board member, and being a board member when something is not going well and people are coming to you of like, what should I do? And you're like, well, I don't know. Really, I don't know. But like, let's work through it and try to come up with some options and try to come up with the best possible scenario. So let's problem solve it together. But even when we come up with a solution, it's like, I don't know. I haven't been in this exact situation before. I'm not in your
Yeah.
shoes, but I'm giving you some like advice that what we're doing right now isn't working, and that we should do something else. And I think that something else should probably be X or Y or Z. But I'm not 100% confident that it's going to work. I just know that what's happening right now isn't working. That's like really that's a big challenge, because what you want to be, and what your founders want you to be is 100% certain. I know that this isn't working for these reasons. I know that this other thing will work better. I know how to do it. Here's how you do it, and I can guarantee it's going to work. That's what people. That's the type of feedback I would love to give. That's the kind of people that's the kind of feedback people would love to get. Obviously, it's not practical, but when you get to like really big, important decisions that at times could be make or break for a startup, it ratchets up the importance of it, which then ratchets up the potential insecurity with it of like, I sure as hell hope I'm not wrong on this because like I'm sort of putting a lot on the line here, or I'm encouraging the team to put a lot on the line here.
Yeah, and I think that's a very good point. I think Terry Pratchett said something along the lines of wisdom is the one thing that becomes bigger the further you stand away from it. And I really love this quote because I think as your influence kind of increases, and especially in bad times, as you said, sometimes you might even know what's wrong with the business, but no matter what kind of decision that you have, sometimes you have to take binary decisions. Do we replace this person or not? And it can be someone on the operational level, or it can be a C level, or it can be like, I don't know, do we take this investor on board or whatever? Like it can be, sometimes there are binary decisions. And no matter what you do, you just know it's going to fuck something up somewhere. There's no question that it's going to happen. And dealing with this is quite hard because the more experienced you become in this industry, I feel like the more you understand what the implications of it are, right? You're not starting to become ignored. Like it's harder and harder to be ignorant to the fact that certain things are just going to have big ramifications. And I think you said this beautifully. It's really about understanding that no matter what's going to happen, everything's going to come different anyways, and there's nobody out there that can guarantee you anything. I mean, otherwise it would become unpredictable again and so forth. But um, yeah, I guess you just have to take it day by day. And as you said, it's really interesting how used we get to scale. Because as you said, I feel exactly the same. Oh shit, only 20 engagements. 20 engagements was a lot when I had 500 followers, Blake. You know, like it's like,
Yeah.
oh my God, I have a
Yep.
post that blew up. Like how many did you get? Like 15 engagements. And I think the crazy stuff about all of this is that you get as a person very used to scale. The biggest user base that I have managed in my life was at Small PDF. We had 50 to 60 million monthly active users. The scale of this is absolutely insane. Every hour the platform goes down costs you a huge chunk of money. And this is just, it's just crazy because you get used to it. You get used to the amount of followers that you have. You get used to, oh, I have 18,000 followers. I'm looking now up to the person that has 100,000. And then you look to people like Adam Grant, like 7 million. It's just like, it's crazy, right? Like it just never, ever stops. And I don't know. I find that very interesting because we find kind of sometimes we lose this kind of connection. We only notice that, oh, where I am right now. And then like the 20 engagements suddenly become shit. It's just like, why am I
Yeah.
so bad at this? And it's crazy. It just fascinates me to no end why we are like
Yeah.
this. I really don't
Totally.
know.
And then it just kind of becomes like we get out of business world and it just becomes like psychology. But it's psychology that applies to, kind of all areas of life, including, kind of business stuff like we're talking about. But, the sort of classic, guidance that the only person you should compare yourself to is a previous version of yourself. Like that is a good kind of comparison. Am I getting better than my previous self? Am I getting worse than my previous self? Like, that's the only comparison you can make. But what our brains want to do, and what we're all wired to do, is compare to other people. And so that's never going to go anywhere positive. Sure, you can learn from other people and you can get ideas, but the only comparison you should really make is to a prior version of yourself. Way
Yeah.
easier said than done, but that is definitely the psychological answer.
And if you're not sure whether we're really good in picking out only the positives from others to just make ourselves feel bad, then you have not like Facebook, Instagram, whatever
Yeah,
it is, right?
the
Like I
filtered
mean,
life. Yeah.
this is the social proof that you need in the market that we're really good at just presenting the good sides of us because that is what's marketable. And it's just gonna get worse. Oh my
Yeah.
God, it's gonna get so much worse. But
Yeah, well, and on Instagram and places like that, it's obviously like the curated, only showing like the most perfect picture from my vacation and the perfect angle, and like you don't see the 100 shots that it took to get that one perfect one, and you put the filter and the Facetune on it and stuff, and it's really easy to point to that as an example. But we get the same exact thing from business people on LinkedIn.
yeah, oh
But
yeah.
instead of like, here's my wonderful picture of my vacation. Sure, you see a little bit of that on LinkedIn these days. It's more so I'm crushing it. Look at how much I'm crushing it. Look at how
Uh,
like all the things I'm accomplishing. Like I would like to humbly thank Forbes at 30 under 30 for like including me. It's such an honor, like all the humble brags, all that kind of stuff. Like those types of things happen. Like that's the business version of like face tuning. And you see a lot of that. And then you start to compare yourself to that. It's like, wow, everybody is crushing it. And every post I see from this one person, like all they do is crush it, and I'm not crushing it. Like I'm sad now. But you have to realize, like again, the same
Yeah,
principles apply
this is
to text-based updates on LinkedIn.
this is so true. I got into a fight with two people, and I want to share it with you because one of them is a VC story. Um, it's like if you start to write on LinkedIn at the very, very start, or in any social media network, it doesn't matter. What you see is only the successful posts, right? So also like the ones that get a lot of engagement, like millions there, of course, right? And then you start to write 20 people, it's like 20 views or whatever. Of course, you get depressed. But the one thing that I started to pick a fight on publicly on LinkedIn, which was really funny, is with investors that claim bullshit returns in a way that, see how I invested 100,000 as an angel in this business and how I 40x'd it. And I'm just like, no, you fucking didn't. No, you didn't. You invested in 50 other businesses and your net gain is probably still shitty and you're in the minus, but you're just trying to cash in on this. And the other thing was people that start like, announcements like, the 30 on the 30. I mean, there's nothing against it. I mean, if you're happy with it, go for it. But don't fucking start the post with, well, I didn't want to initially post this, but my friend said I should. Just like,
Yeah.
come on, man. Just just put it out. It's fine. It's okay. But don't
Yeah.
give us the like, oh yeah, everybody told
The
me I
fake
should do
theater.
it because
Yeah.
it's
The
so
humble
important.
theater about it. Yeah.
But this is, in the end, what this leads to is really damaging situations for our own psyche. And then you also have on the other side, you have companies like Theranos, where you look back in, like, I'm not sure whether you've seen the Netflix documentary. I found it quite funny. But if you look back to the original TED Talks and everything, everybody goes like, oh, I cannot imagine how stupid these VCs were and everything. And this is exactly like we're living in this ecosystem. And from the outside, it's always super easy. But again, as you said, if you have a lot of VCs around that are doing the same thing, everybody tries to not miss this one thing because everybody has FOMO, right? Because these stories. Well, I had a chance to buy 100,000 from stock from Microsoft when they were still in a garage, and I didn't do it. And so everybody's like, oh yeah, I don't want to end up like this idiot, right? So like, I'm just going to diversify myself and go in everywhere for shitty deals, and that's just what happens in the end. So
Yeah.
you know,
No, there is despite all of the kind of sophisticated sounding strategies and philosophies that VCs have about how they decide to invest in one business or another. The unspoken motivator for a lot of VC investments, certainly in 2020 and 2021, was just straight up FOMO. If this is the next big thing, I don't want to miss it. So like, let's be safe and just invest. There was a lot of that.
yeah, I'm not the idiot that missed out on the next Facebook.
Yeah,
Exactly, it's
yeah,
exactly what it was. And yeah, so yeah, I guess we're getting close to time, and I would like to ask you maybe one or two questions. So in general, outside of the generic trends, but you can also pick anything. But like, where do you think is a trend that is not that obvious, or like, what is something that you believe in? What is a trend that you are betting on, either personally or as Openview, that you feel like is interesting?
So in product-led growth, I think that there is a perception that product-led growth works in certain categories and not in others. And this has been, a thing for a little while. I think that's, for a while people said, oh, well, security products will never be, sort of sold by way of a PLG motion. Sneak and others are showing that's wrong. But there still are some holdouts in terms of the average person's perception, which is that PLG will work for broad horizontal markets like collaboration and work management and communication, but it's not going to work for my vertical software business. But I think that's actually probably the next big wave, which is applying PLG to every vertical software business out there. And we're already seeing it starting to happen. I mean, there's companies that are doing it in, PLG applications for truckers, PLG applications for construction workers. Because at the end of the day, it's like these people need tools as well. Guess what? They all have smartphones. Guess what? All of those smartphones already have apps on it. They know how to search an app store and look for something that solves a problem they have. And that's what they're doing when they're on the job. whatever their job is. And so there's an opportunity for, to them, they have no idea they're adopting business software. They just found an app. But there's a huge opportunity for PLG in those vertical markets, and I think that those are oftentimes overlooked or underappreciated. That PLG can be really huge there.
I think I agree on this, but I have one addition that I would make. And one of the reasons why specific enterprise markets are not penetrated by it yet is that the existing clients that these big enterprise businesses or sales-led businesses are going for, they have one specific problem. It's not on the cost side and it's not on the product side. It's on the integration side. It's incredibly fucking difficult to get any product into a big company that is multinational that has some kind of form of asset management system, for instance. And that bastion will also fall. I don't know how it's going to look like, but I'm pretty sure the answer is somewhere in some machine learning way, in the way that we also leveraged APIs. APIs were the first way where we said, like, here's something standardized and then you can communicate with it. There's going to be something new that is working like APIs back in the day where you can just like integrate something and plug and play it. The moment this happens, the party is over.
Yeah.
The party is over, because then all of these markets are wide open to anyone that understands product-led growth and customer centricity. As soon as this thing is over, because the prices will fall, the integration are going to become easier, and then you suddenly enter the commoditized market. I don't know how it looks like, and I don't know how it will look like, but that's definitely going to come. So I also agree with you. These markets will fall for sure.
Yeah. There's also an element there, though, that I think even if some of those large regulated industries or just large enterprises, if they're less likely to adopt in the classic PLG self-service motion, that doesn't mean that self-service doesn't work. I will point to, or that PLG should be avoided. The best example is the best PLG business on the face of the earth, which is AWS. And AWS obviously has a huge PLG business where any developer, tons of startups, everybody comes and just, effortlessly and frictionlessly spins up whatever they need. But guess what? The US government's on AWS as well. Now, their customer journey was not an individual developer signing up and sort of migrating all infrastructure over. It was a sales-led process. So you can have 2/3 of your business that's PLG, and then sort of 1/3 that still has a sales-led motion. But why is that 1/3 buying from you? It's because the rest of the market is adopted by way of PLG, and you've become the standard, just like AWS. And we see the same thing happening with Datadog now on the observability side, and Snowflake, and many other examples where PLG can be the foundation and the majority of how you access the market. And even if it's you're not going to get to the regulated industries, you can still get there through sales and use your sort of evidence and customer centricity and your better product that you have from your PLG business to then win and just make sure that they don't buy IBM again.
And just to make a note for the listeners, if we say product-led growth, we don't say no salespeople, right? So it can still be by way of product-led sales. I think one of the big differences in the sense of AWS is that even if you copy the entire tech stack, even if you copy everything, right? So you have the exact same setup and you offer the same prices, enterprises will still go for AWS for one specific reason. Because of the market adoption that they have, it's very certain that they're still going to be around in 5 years. And that's the one thing that an enterprise can never gamble on, and that is on a company that is just out of business very fast. So the funding structure and how long that somebody has been around is also becoming incredibly important for any enterprise solution. And that's why a Figma is not a Figma just because you copy it and then you kind of put the same stuff on it. It really matters how big the company is and whether it's going to stay around. But yeah, no, great points, Blake. I really, really enjoyed this. And I think we're going to close it at this point. Is there anything that you want to say to the audience? How should people engage with you? What can people do to make your day better?
Yeah, I mean, add me on LinkedIn and then subscribe to the PLG 123 on YouTube.
Oh yeah, right. Yeah, it's called the PLG 123. Yeah, there you go. Yeah, highly recommend that. So if you need your daily PLG fix, well, not daily, but is it daily now at this
Weekly.
point? Weekly. There
It's
you go.
weekly. Yeah.
Then go
2-3
to Blake.
clips a week, something like that.
Yeah, there you go. So I really, really appreciate that, and I think you're doing outstanding work. I'm not just saying that. I think you're one of the voices that we will hear more, and very happy to have around. Thank you so much for joining me today.
Thank you, Leah. This is great.